Hi everyone, welcome to this session where we are going to discuss a question on taxable income. And the question says, Mr. Kobe is a civil servant who earns a monthly salary of 21,200. He has a house allowance of 12,000 per month. Other taxable allowances are commuter, Kenyan shillings 1,100, medical allowance 2,000 shillings. He is entitled to a personal relief of Kenyan shillings 1,240 per month. Using the income rates below, solve the questions that follow. So learners, you can see we have a table with the two columns. The first column is income in Kenyan shillings per month. Then the next column is rates in Kenyan shillings per 20 shillings. It's very important, learners. First of all, we get to understand what the table heading means for us. We get to understand what the table heading means to us, learners. After that, so you can see there we are having rates in Kenyan shillings per 20 shillings. What does it mean? That this rate is for every 20 shillings you are being charged that rate. Question: determine Roman 1 the taxable income. How do you calculate taxable income, dear learners? How do you calculate taxable income? Remember that taxable income learners is calculated by taking the basic salary plus allowances. That is how you calculate the taxable income. When you talk about the taxable income, this is the amount from which tax is being levied. The amount from which tax is being levied. So learners, we do substitution here. What is our basic salary? We go back to the question. This Mr. Kobe earns a monthly salary of 21,200. So the 21,200 is the basic salary. So that is 21,200. Then we are going to add our allowance. He has a commuter allowance of 12,000, so we are adding the 12,000, which is our commuter allowance. Let's also see if he has another allowance. Other taxable allowances, this 12,000 was the house allowance. Other taxable allowances are commuter allowance, which is 1,100, medical allowance, which is 2,000. So that is 1,100 plus 2,000. 1,100, you add 2,000. When you do the summation here, remember this amount is in Kenyan shillings. So that becomes 36,300. 36,300 Kenyan shillings. That is the taxable income. That is the amount from which tax is going to be levied. Roman 2, the net tax. This net tax in bracket, we've been told what? The payee. Another term for this, learners, if you don't get this, sometimes you can get them, they are talking about the tax paid. So if you get a question saying calculate the tax paid, that is just still the net tax, the tax paid. So for us to get the tax paid, because you know that tax is going to be levied from the 36,300, we are now going um, to tax this amount. So we see in the first band between 1 to 8400, 2 shillings is being charged. But remember, it is 8400, but for every 20 shillings in 8400. So in the first band, it is 8400. For every 20 shillings of it, we charge 2 bob. When you do that multiplication, that becomes 840. That's the first slab. In the next slab, how do you get the value in the next slab? You simply take 18,000 minus 8,400. 18,000 minus 8,400, you get 9,000. You get 9,600. So in that one you're getting 9,600, and for every 20 shillings in the 9,600, we are charging 3 shillings. So the tax there will give you, when you do that multiplication, that is 1440. 1440. Then we go to the next band. That is now 30,000 minus 18,000. You are going to get 12,000. And in this 12,000 that we've gotten, learners, for every 20 shillings in 12,000, we are charging 3 shillings. When you work it out, you are going to get sorry, not 3 shillings but 4 shillings. 4 shillings, not the 3 shillings. That should be 4, and when you multiply, that is 2,400. Remember these values on our right hand side. Maybe